Thank you. Good afternoon, ladies and gentlemen, and welcome to Snam 2019 first quarter results presentation. In the quarter, Italian gas demand was up 1.3% due to harsher weather conditions with increases in the industrial sector, mainly glass and ceramic sectors, but also steel and chemicals, while thermoelectric consumption was lower than in the first quarter of last year, which benefited from the French nuclear outage and lower wind production. Demand grew in Europe as well, with the 6 main consuming markets up 3%, and in particular UK up 11%. This is largely due to the residential sector. Meanwhile, the strategic value of the flexibility and interconnection offered by our European assets is becoming increasingly apparent. In February, Italy made a first step toward becoming a gas hub when price dynamics made it more convenient to supply Switzerland from Italy rather than from northern markets. Reverse flow is expected to be fully operational in October 2018, when we will be in a position to export up to 40 million cubic meters per day through Passo Gries and 18 from Tarvisio. Turning now to the UK market, there has been particularly strong interest from traders and shippers on Interconnector UK, in which Snam has recently increased its stake to 23.7%, also following the closure of the Rough storage field. Indeed, products sold in the new capacity allocation mechanism launched in mid-April, in addition to the scheduled auctions on the Prisma platform, were well received, and in some cases the maximum capacity offered to the market was sold. These products were related to capacity sold on a seasonal and quarterly basis for 2018 and 2019, with the highest demand being from seasonal capacity for summer 2019 and quarterly capacity for the first quarter of 2019. In France, 100% of the AGS storage capacity for the thermal year 2018-2019 has been booked. Let's now look at the headline figures for the first 3 months of 2018, which we will comment further later. EBITDA was up 8 million euro, mainly thanks to the higher regulated revenues. Net profit was 2,054 million euro, in line with the same period of 2017. CapEx was 156 million, in line with our budget. The strong cash flow generation of the quarter covered investments and the payment of the interim dividend, as well as the continuation of 2017 approved share buyback, leading to a net debt at the end of March of 11.4 billion. On the strategic side, the consortium made up of Snam with a 60% stake, Enagas and Fluxys with a 20% stake each, has been selected as the preferred bidder for the 66% stake of DESFA. The Hellenic Republic will have the remaining 34%. EBIT in Q1 was 355 million euro, up 2 million euro over the same period of the previous year. This number reflects increase in regulated revenues for 23 million, mainly due to the increase in tariff RAB, inclusion of ITG, and a gradual ramp-up in regulated services. Increase in fixed controllable costs for 4 million euro, mainly due to labor cost inflation, the release during the first quarter of 2017 of a non-cash provision accrued in 2016 on labor costs, and the inclusion of ITG costs that we expect to be fully absorbed by 2020. Depreciation was up 6 million euro. Other components include mainly extraordinary non-regulated revenues in 2017 as an insurance refund for about 1 million euro and sales of materials for about another 1 million euro. 1 million related to new business development and 3 million to net provisions. In the first quarter, we continue to focus on our efficiency plan in line with our target. Efficiency in the first quarter were compensated by a different phasing in existing corporate costs compared to the first quarter of 2017 and ramp-up of the merger synergies. Net profit for the first quarter of 2017 was 254 million euro, up in line with last year. This was driven by the positive performance of our operations, just commented, lower net interest expenses of 3 million euro, thanks to last year liability management, pre-funding activities completed last year, and treasury optimization carried out during the quarter. Slightly lower contribution from associate, mainly due to transmission regulatory review in France from April 2017 onwards, and a phasing effect in TAG. Higher taxes due to higher EBT and lower ACE benefit due to the lower recognized statutory percentage from 2.5 to 1.5%. The tax rate for the period was around 25.3% on EBT, including associates, versus 26.9% in full year 2017. Cash from operation was 775 million euro, thanks to the solid net profit and a positive working capital. Due to the effect of tariff-related item, net tax payable accrued in the period and net trade payables. Balancing activities impacted on working capital was 43 million euro, lower than in first quarter 2017, due to the lower temperatures registered this year that had led to higher purchases of gas to balance the system. This effect will reverse in the next quarter. The strong cash flow generation covered CapEx, financial investment, mainly cash call from TAP, the payment of the interim dividend, and the buyback, leading to a net debt at the end of the quarter of 11.4 billion. Let me now give you an update on Snam debt structure. In the first quarter, Snam tapped again the bond market, exploiting favorable market conditions, and in particular, strong market appetite for floating rate notes, issuing a 350 million 2 years floating rate note that Snam swapped to fixed at a negative yield of circa 4 basis points. The issuance of this instrument, which is different in terms of tenor and size from standard Snam benchmark issues at fixed rate, can be considered as part of our treasury management optimization strategy. As for other funding needs, please remind that a 3.875%, 850 million euro bond recently expired in March and has been already financed via the pre-funding actions executed in 2017 with an average coupon of around 1%. Overall, the average cost of our debt in the first quarter was slightly below our full year guidance set at 1.8%. As regards to that breakdown, at the end of the first quarter, the fixed rate portion is 74%, in line with our three-quarter fixed floating debt 2018 guidance, which we confirm. Maturity profile is well spread over time, and liquidity profile remains strong. With reference to the share buyback program, in April, Snam reached an amount of treasury shares equal to 3.5% of the share capital, corresponding to the limit set by the previous shareholder meeting held April 2017. Since the start of the program, and including the purchases made after the end of the quarter, Snam acquired 121 million shares for an aggregate of 455 million euro at an average price of circa 3.7 euro per share, corresponding to a 4.5% discount on VWAP of the period and to an average premium to RAB in the mid-single-digit area. On the 24th of April, the extraordinary shareholder meeting of Snam approved the cancellation of 31.6 million treasury shares held by the company without share capital reduction, and the ordinary shareholder meeting authorized a new share buyback for a maximum amount of 500 million euro and up to a maximum of 135 million shares, without exceeding 6.5% of the share capital for a maximum period of 18 months. In April, we also completed TAG refinancing, raising a total commitment of 430 million euro, of which 2,060 million under Schuldschein, DCM-like instrument under German law, mainly devoted to local investors, with an average tenor higher than 7 years, and the remaining part, banking facility with a 5-year tenor. The new structure implies a significant increase in debt maturity and fixed rate portion, together with a good reduction in interest rate risk. Let me now turn to the acquisition of DESFA. The consortium led by Snam has been selected as the preferred bidder for 66% of the Greek transmission operator. DESFA has a very good fit with our strategic and financial acquisition criteria. Strategically, it is particularly interesting because of its potential role in the development of the southern routes. The DESFA network is placed where new routes for gas coming from Mediterranean Sea and Middle East or Europe will likely transit. Moreover, as Greece becomes a transit country for new sources of gas supply, it may have additional interesting opportunities to interconnect with East and Central Europe. According to the privatization procedure and the legislation, some steps are necessary for the completion of the transaction that we expect to happen by the end of this year. From a financial standpoint, the acquisition values DESFA enterprise value at around 6 times the average EBITDA for 2016 and 17. DESFA results have been on an improving trend as the Greek macroeconomic and gas demand environment continue to recover. We are currently finalizing a no-recourse acquisition financing at BidCo level. The debt portion of the overall acquisition price is expected to be in line with similar transactions. Depending on the final structure, the size of Snam investment will be somewhere in the region of 110 to 130 million euro, and we target returns on this investment which are coherent with our criteria of risk-adjusted returns higher or equal to the returns available on Italian CAPEX, and broadly in line with our existing international portfolio. DESFA's solid CAPEX plan for the next year is self-funded and is driving a stable RAB in the medium term. This, together with a net financial position close to zero, gives the company potential space to optimize the capital structure. Snam has 60% of the rights in the BidCo, which will express 5 out of 9 board members and the CEO. This concludes our presentation. We will now be pleased to answer your questions.
Thank you. If you would like to ask a question, please signal by pressing star 1 on your telephone keypad. If you're using a speakerphone, please make sure your mute function is switched off to allow your signal to reach our equipment. Again, it is star 1 to ask a question. We will now take our first question from Xavier Suarez from Mediobanca. Please go ahead. Your line is open.
Hi, and good afternoon, and thank you for taking my questions. The first one is on the acquisition of DESFA. If you can give us some more details on the financial criteria, the profitability that you are expecting from this acquisition. I think that you said that the total equity investment should be slightly north of 100 million euros. If you can confirm that, and the EPS impact that you are expecting from, I guess, 2019. And also, when you are evaluating the company, which is your assumption regarding the allowed return on RAB for this vehicle from the 1st of January 2019? That is the first question. The second question is on TAP. There is continuous news flow on possible delays in the program, particularly when it comes to the connection with the Italian system. You can please update us on the completion of the TAP pipeline, and if that may happen any delay in your view. And the third question is on the recent news flow that Snam could be interested in some privatization process in Brazil. If you can give us some light on that. Thank you.
Thank you, Javier. So on the first on Greece, I think what we meant is when we say that the returns that we are targeting and that were implied in our offer are consistent with that of our international associates, I think I've been fairly precise in the type of returns that we have embedded in our offer for DESFA. As you know, what sort of equity or cash return we are making on our international associate portfolio to date. So that's a good proxy of where we expect DESFA to be, depending on how we will finalize the acquisition financing that we are discussing, which is the reason why I'm giving a range, and is also the reason why I'm not being too specific, as we are close to finalizing final terms with banks. But until that has been done and signing takes place, it's a little bit premature for us to be specific on absolute equity contribution, and moreover on EPS impact for next year, also taking into account that, as you can imagine, we will be having dialogue with the regulator as it relates to the renewal of the tariff for the coming years. As it comes to TAP, nothing changes on the timeline. So as we've been saying in March, we still expect TAP to come into operation during 2020. So nothing is really changing since what we said a couple of months ago. When it comes to the rumors that you are referring to, as you know, we don't comment any M&A rumor in general. I think what matters is really just to confirm our commitment to the investment criteria that we stated 1 year ago and that we confirmed last March. We want to maintain our rating and credit metrics and risk profile first. The investment needs to generate accretive returns on a risk-adjusted returns for the investment. Again, that needs to be equal or better on an adjusted basis than one we make on our CAPEX. We are keen on investment that enhance the value of our existing infrastructure or that allow us to develop and leverage our industrial capabilities and unlock additional growth or optionalities.
Many thanks.
Our next question comes from Harry Wyburd from Bank of America. Please go ahead. Your line is open.
Hi, good afternoon, everyone. Most of my questions actually just got asked, so just a couple of small ones to follow up. You mentioned on DESFA that there was a good economic and gas demand scenario in Greece. Is there, can you quantify the volume exposure or GDP exposure of that business? Is it the same as what you have in Italy in terms of the volume exposure is capped and collared within a very small range, or is there a wider range in Greece? And then secondly, just returning to slide 4, just on the costs, sort of 15 million euros of extra costs in the quarter. You mentioned the demerger synergies, dyssynergies. Can you just remind us how much of that 15 million increase in cost came from sort of right-sizing things post the Italgas demerger, and whether there's any further demerger cost impacts that we should expect for the rest of the year? Thank you.
So the first is easy. There is no volume risk because it's a capacity regulation structure. So I think there is a positive implication on volumes that is more related to past revenues from DESFA rather than anything that relates to the new tariff regime that is currently in place. As it comes to the cost, I think the demerger these synergies that we quoted in June 2016 now were targeted 10 million the first year and 15 million in the second year. So when I made reference to the fact that there is a ramp up in the merger dyssynergies, I'm simply reminding that the timeline that was required to have the full impact from the demerger was then more than 1 year. Overall, we were at 19 million efficiency by the end of 2017. By the end of the first quarter, we have reached almost 20 million. But costs are not all linear, and so that's something that needs to be kept in mind. And I think it's also important when looking at the evolution of cost and EBIT in the first quarter is just remind that in the first quarter 2017, the phasing of the costs was slightly unusual. Costs were relatively lower in the first quarter than in the rest of the year, and that's something that you need to keep in consideration when comparing quarter on quarter.
Okay, thank you.
Our next question comes from Ree Dias from UBS. Please go ahead. Your line is open.
Hi, good afternoon, everyone. Just a couple of questions. The first one, Alessandro, just to confirm on your guidance, you're not including any impact from the acquisition of DESFA, right? So this will be the first question. And the second question, also very, I would say, broad regarding balance sheets. Are you able to tell us what will be Snam's balance sheet capacity for further acquisitions after the acquisition of DESFA without any significant impact on your credit ratings? Thank you.
Thank you. I guess for the first question, it was related to net debt guidance, correct? That's what you meant?
Yes, correct.
Yeah. No, of course, the full year guidance that we gave did not include DESFA because at the time we were still in a competitive auctions. So aside from the DESFA equity contribution, we have no reason to make any further, if not to confirm our guidance for the year. When it comes to financial flexibility, I think that, as you know, we do have the most stringent parameter that we have is the net debt to RAB at 60%. So we ended 2017 with 52%. You know that rating agencies look at our metrics, looking at the pro rata contribution also of the RAB of our acquired participations. So I think that you can roughly work it out from next year because the closing is expected by year end. The type of financial flexibility that Snam will still have. But as I said, we expect the equity contribution to be in the 110, 130 million, so not really moving the needle in terms of our financial flexibility.
Yeah, very clear. Thank you.
Our next question comes from Enrico Bartoli from MainFirst. Please go ahead. Your line is open.
Hi, good afternoon. Thanks for taking my question. First of all, I'd like to go back to DESFA. If you can give us the rough value of the company at the moment, and actually on the press, there were indication of potential additional capex very significantly related to the company. If you expect that actually the company would provide the possibility to significantly grow the rough value over the next years. A second question is in general on your comment on this press speculation about your interest in Brazil and the fact that, if I understand well, you are looking for opportunity that would provide an interesting return on capital. This implies that actually now you are interested also in looking at M&A opportunities outside Europe, because I guess that so far probably your interest was focused on continental Europe. And if you can comment also on the press, there was reported some contacts with Gazprom recently, if these are part of this your new strategy or new consideration in terms of M&A. The third one is related to the buyback. Particularly, you canceled some treasury shares during the period. This is something that, first of all, can you elaborate on the rationale on this, and if we are going to see this process to continue also in the future over the next quarters? Thank you.
Okay, so going in order, DESFA, the 2016 RAB was approximately 800 million. That's the latest publicly available number that you can take as a good proxy. In the National Development Plan for 2017-2023, DESFA, and this is public, indicated 330 million of capex, including the connection with the LNG plant over Vitussa. This is DESFA plan. I'm not saying that this will be our plan, but I think we do expect some good contribution in terms of investment to further develop the RAB. And I think more importantly, we also see, on top of the strategic connotation that I described earlier, the opportunity to explore the introduction of CNG as well as maybe biomethane for the Greek market, which offer us additional scope for maybe leveraging on a good existing platform. It's also important to remember that DESFA 2017 year-end numbers closed with a 5 million net cash provision, so it's a company that effectively has sufficient flexibility to fund its own capex, and I would even say that has scope to optimize its capital structure. On the question Europe versus non-Europe, I think we were relatively clear when we delivered our strategy presentation in March. I think what drives our investment criteria, which clearly says that to the extent that there are investments that enhance the value of our existing infrastructure we like, so that's clearly something that speaks for things that are close to our existing presence, but does not exclude that for a good investment that is consistent with our criteria, we may not look at it if it is outside of Europe. So I would actually put it the other way around. As it comes to Gazprom, I think, again, it's public knowledge that as part of the EUCAM procedure, we've been asked, as well as DESFA, for his own portion to evaluate, carry out a feasibility study on a possible new route bringing gas into Italy. So it's our own duty to have this type of dialogue with upstream or shippers that are keen to explore new routes for gas, but nothing more than that. So I wouldn't read too much into that meeting. As it comes to the cancellation of treasury shares, well, I think we've been asked many times since we started our share buyback what sort of utilization we had in mind for those bought back shares. I think we always said that with exception of those that are there to serve our convertible bond that was done in the context of a treasury capital structure optimization, it was viewed by us as a way to further enhance return for our investors, which clearly can be crystallized further by also the cancellation of treasury shares. When it comes to the new share buyback, which has just been approved, our criteria will not change. So we've been mainly driven by value consideration in the pace at which we have carried out, which is confirmed by the implied share price at which we bought back our shares, as well as the average premium on RAB that we reported, i.e., until we think that there is a lot of unexpressed value for our own stock, one of the best place where to invest our capital and our financial flexibility is clearly our own RAB. So that's the logic behind it. I would just want to remind that in our net debt guidance, there was no assumption of further buyback executed during the year, because as I said, it will be more a value-driven consideration that we will follow.
Thank you.
Our next question comes from Stefano Gamberini from Equita. Please go ahead. Your line is open.
Sorry. Good afternoon, everyone. Just two quick questions. The first regarding the buyback. If